Hello friends, welcome back to my channel. Please like, subscribe and also press the bell icon. So this video is also about another banking stock. Why I'm making this video, because this is really undervalued. And also it is given a breakout on Friday. So I thought of covering it. So let me tell you why exactly I feel this is a undervalued. So this is also, I think, bank is also from Karnataka, which is also existing almost like from 100 years. So so this is the concentration of the branches. Karnataka 64%, Maharashtra 6%, Tamil Nadu 6%, Andhra Pradesh 5%, and Telangana 3%. I think it looks like it's mainly kind of concentrated in South India as of now. So why I feel, I think, why it's undervalued, I will try to cover that. You can see the market cap is only 7,000 crores. Yeah. What I like the most is the equity dilution. If you see, the face value is still 10, even though the bank is existing from 100 years, and number of shares is just 37. You can compare other banks as well. For example, if you see Federal Bank, it is almost like, sorry, IDFC First Bank, it's almost like 850 crores. So if even if you compare other banks, I think this is one of the bank which has got very less number of shares which have been diluted. That means you can think about the potential which they can raise money by diluting the shares. It's huge. And also face value is 10. This is also another advantage. So the PE value is 6.22. 6.22. I think this is really kind of a good PE value. And another thing is also the book value is 333. So usually the bank, which is actually governed by RBI with the strict policies and all, which is available almost like 0.5 times book value. So the banks are usually, valued based on the book value. So this bank is really undervalued. For example, just to give few examples which I already covered. For example, Equitas Bank book value is 54. It's already trading at 64. IDFC First Bank is also 54. It is trading at 78 or something. Yeah, I mean, most of the banks, RBL Bank, I think it's also trading at almost like the book value. So this bank, private bank, is available at zero point 0.5 book value. Even if you see Bandhan Bank, it's really got very bad book quality, like GNP and all 5% and all. That is also trading at 1 times book value. So considering all these things, I think this is kind of a no-brainer. Of course, I'm not a SEBI registered financial advisor. Please take this video as just for education purpose. You have to do your own analysis before buying or selling the shares. So let's continue. So ROC, ROA and all, it's okay. But based on this price to book value and considering I think why it was not re-rated was mainly there was an hiccup related to the MD and CEO. So the existing MD and CEO, I think he resigned a few months back. There was uncertainty in the leadership. So because of that, I think the market was not giving the right value to this. However, as you can see here, this is the quarterly result which was declared few days back. So you can see the profit, it's most like 319 profit is it has declared, even though it's not an all-time high profit, but however I think the profit also improved compared to last 2 quarters. And gross NPA and net NPA, I think this is also kind of improved compared to last quarter, but it's not very good GNPA and NNPA. But however, considering the RBI's strict policies, as well as considering the banking sector which has been actually almost cleaned up now, and also considering the growth cycle which is expected because of the GST cut and other things, usually financials and banking sectors are going to do well in another 1 to 2 years time, because most of the cleanup has been done by most of the banks. So considering all these factor, I would say this is undervalued. So another thing is, actually just few days back there was an announcement done. So you can see here, actually on 15th November, so they appointed Raghavendra S. Bhatt as MD and CEO, actually effective from 16/11 onwards. So for 1 year, they've actually announced him as MD and CEO. At least this uncertainty has gone. And also Mr. Raghavendra S. Bhatt is also kind of a old veteran in Karnataka Bank. He's also new. He's not a new member or something like that. He already knows the DNA of the bank, and hope he will take this bank to the next level. So even the this is a shareholding pattern. I think 14.6% is with FIAs, and DA has also got some 16%. Out of that, I think HDFC Life anyway. Okay, this is Quant Mutual Fund is also invested here, small cap fund. So if Quant is there, you can think of they will usually to do thorough analysis, but of course they can also go wrong sometimes. But however, Quant is invested 3.9%, and HDFC Life 3.59. LIC anyway, we don't need to give so much importance because we don't know. It's also kind of a public sector bank. So Bandhan has actually recently entered 2.56% they're holding, and Bajaj Alliance 1.55, and oh, Bandhan, I think maybe it is okay. I'm not sure. I think there is also Bandhan here and there is also Bandhan here. They've exited and they have reclassified here. Maybe I think they would have consolidated to here, I guess. So these are all the major shareholders, but you can also check the trading view. So I am actually on a day one day chart. So as you can see, it has given a breakout, I think, at with huge volume. So I think if it by any chance if it comes 180 and below, so this is really good buy. So I don't see resistance at least till 190 200. So where I can see this this fair value gap of this red box, maybe there you can get some resistance. I think till 193, I think this there does not have any resistance. You can also see the candle. I think this candle has touched the 193 level, and it has come back on Friday. So probably I think it can go up very easily. So by any chance, if it comes back to this zone 178 and 170 to 175 range, I think this is really good bank. So considering the new MD and CEO, if he is able to post, I think, good profit, so then this can also easily it should at least go to one time book value. I think 333 is the nominal least expected target based on the other parameters. I think the CASA ratio and all is not so good. CASA ratio is means current account and savings account. It's 31%. I think this is one of the negative. And the second negative also, the cost to income ratio has gone up too much. I think they wanted to install a new software or something. That's why they spent a lot of money. Though earlier the cost to income ratio was actually 47% or something. This has gone up to 61%. I think another target for the MD and CEO was also to bring down this cost to income ratio. Another good news is also the provision coverage ratio. That means whichever the loans are there where they have given the provision, it is almost like 80%. I think that is one of the good ratio. So I hope the MD and CEO will take care. At least that uncertainty of the leadership has gone now. I think I would say I think this can definitely at least to trade at one time book value. So if you're a value investor and there is no risk also, they're also paying almost like 2.5% of dividend they're paying. Now let me quickly show you the dividend yield as well. So here 2.65 dividend yield is there. So and also very small market cap for a bank, and good number of equity shares is also very less. Considering all these factors, I would say even you can see the price to sales is not there. Even at least one or two times also you should get it, but it has not got that price also. So definitely I think considering the MD and CEO is there, new CEO is there, so this should get re-rating. Even the PEG ratio, I think this is the price to earnings divided by the expected growth. You can see 0.17. This is really good PEG ratio. So I hope this video helped you. So please As I said, you need to take the decision on your own. Thanks for